Hey everybody, good afternoon and welcome to today's coaching. Sound check please. How's it going? Hope everybody's doing well. Hope you had a good day. Let me know if you can hear me. Hey Jamil, hey Bobby, JC, hey everybody. Musab, how are ya? So today was probably, honestly, the choppiest day I've ever seen. One of the choppiest days I've ever seen. It's really choppy. Range bound the whole day. In the post market, the futures are down to 355.80, basically somewhere down here. We have a sell setup in place now. If you kept the Q's swing, the tightest trail, the absolute tightest trail, would be 359.20. Okay, that would be the absolute tightest trail. The hourly pivot is way up there at 363.20, but I added a little bit to the Qs, so I'm not willing to give it to 363. I'm gonna trail it to 359.20 basically. So we'll see. Yesterday after the close, the futures were down also, and then you saw what ended up happening today. The Qs ended up gapping up 0.5%. So you never know really what will end up happening between now and tomorrow morning. But as of right now, the Qs is lower. What do I scan for? Sure, we can talk about that. So basically, if you think about it. So I'm, usually I go over a couple things, but let's just answer some questions because we are, we have an open house, so there's lots of questions. So if you think about it, we basically have two things. Okay, let me now just like use this as a whiteboard. Okay, we'll just use this as a whiteboard. If you think about it, as I said, there are mainly two patterns to look for, which are what are they? What are the two patterns that we should look for? Okay, let's put it this way. Let me ask you. Let's put the question differently. What ways do prices correct? In what ways do stocks correct? Through time, exactly, Moy. Through time or price. So a stock that's moving up. Let's just say a stock that's moving up. If it's moving up like this and it's up a lot, it's really risky to jump in long when it's already up a lot, because at any moment it could reverse, right? So we do want to find stocks that are up like that, because that means they're really bullish. They're getting bought. But we don't want to jump in randomly, because if we get in here, comes in a little bit, you don't know how much it's going to come in. What if it keeps going? So what we do is we wait for them to correct a little bit. And how do they correct? They can correct either by pulling back, okay? And then when they go back up, you get in them long. Okay, that's called the buy setup play. So you get 3 or more red bars, and then if 3 or more, it doesn't have to be 3, it could be 4, right? And then when the last bar's high gets taken out, that's your entry long. If you think the stock is still bullish and you like the play. So I look for pullbacks, but sometimes there are stocks that don't come in at all. So they go up and they start to pause a little bit, and you think, okay, it's about to pull back, and it doesn't. It just goes sideways. So that's a correction through time. Exactly. So you can look for the base breakout. So ultimately, there are pretty much only two patterns to scan for, either pullbacks or breakouts. Now there's a third, which is when a stock is just falling apart, like so. It's down a lot, down, and then it starts to print wide range bars. That's called that's not a real correction, it's a crash. That's a climactic buy setup. And you look for the narrow range bar and you play above it long. I'll give you a great example of this today at the end of the day, but we didn't have time. It's the TREX on the 5-minute chart. So that's a beautiful example of a climactic. Down a lot. Actually, we don't have wide range bars, but the volume, it's also like the COLB. So down a lot and then starts to accelerate. Not much of an acceleration there. We like them to go like real vertical. So again, in theory, there are 3 patterns to look for, but how easy or how often do you find stocks that are falling apart or going vertical to the upside? Very rare. So that leaves you with 2 main patterns to look for: base breakouts and pullbacks. Now, what about, when you get a 1, 2, 3? Okay, that's like a, sort of like a breakout pattern. It's not exactly a breakout pattern, but like a breakout pattern. So that's another pattern that I look for. But primarily I look for stocks either that are consolidating or that are bullish but happen to be pulling back at the moment. So that's what I look for. And the way I go about it, I have a scanner that was custom made for the setups that I look for. And I'm telling you, you can't get your hands on it. It's like, it was custom built. And I'm telling you, it's not that good. I find most of my plays by manual scanning. So I have a machine with 2 4K monitors, 40-inch 4K monitors, and I just flip through charts. So I have already charts laid out, and I just flip through them. So I have organized the entire stock market by sector, industry, and by volume. So when I'm scanning, I look for stocks that are, so I scan sector by sector. So I look at the tech stocks, the high tech stocks, okay? And then within the high tech stocks, there's the semiconductors industry, there's the software, the cloud-based companies, there's networking, hardware, I don't know, lots of different subsectors, so to speak. And so I have them on thumbnail charts, and I go through those. And then once I'm done, I look at the retail sector. But then within retail, there's department stores, there's apparel, there's all kinds of things that are considered like casinos, are actually part of the retail sector. So I scan sector by sector, and each sector and subsector is organized by volume and by playability. Like some stocks I know are not playable, so I exclude them from my universe. And then I just visually look at the charts quickly, and just type them up into a watch list, as you see me do at around 1 o'clock, between 1 to 1:30 is when I do it. I type them into the watch list. Once I'm done, then I go over the watch list and I say, okay, which ones do I really like, and I put them on the favorites. That's it. It's really as simple as that. Of course, with time, after a while, you start to know exactly what to look for, right? So it doesn't take you don't stare at the chart and forever. You just look at it, glance at it, and you immediately know whether your pattern is there or not there, and you move on. And I don't honestly look at every chart by chart. I just look at the monitor, which has I have, again, 2 4K monitors, 40-inch. Each monitor has about 100 charts. It's 98 charts, thumbnail charts. So I just glance at the monitor, and I just see what stands out, what jumps out at me. If it doesn't jump out at me, I don't even bother looking into it. Basically, I'm not interested. So I look for things that really truly jump out at me when I'm scanning, and then again I add them to the watch list, and then from there I analyze them one more time. I go over the watch list, and I see what looks the best, and I try to take the best. Okay, so that's kind of in a nutshell what I do when I scan. Does that answer your question? A couple of people asked about how to scan. So I have a manual, low-tech scanning system basically, and I have a high-tech scanner, but I don't even use it that much. Does that make sense? The person that asked about scanning. Okay, and I've done a video also on it before. Okay, JC, thank you. So, all right. What else? What other how many thumbnails per 4K monitor? 98. So hold on, I'll just 98 charts. 98 charts per monitor. They're small charts, but each, if you think about it, when you think about monitors, so 4K resolution is 26, should be, I think, 2680. 2680, is that right? By 1600. I think that's I think I'm wrong. Hold on just a second, let me just look it up. 4K resolution. What's 4K resolution? Hold on, let me just see. It's by 21. No, it's 2160. Right, that's not it. It's 2160 by 3840. Okay, that's 4K resolution. 2160 by 3840. Now, 2160 times 3840 gives you, check it out, 8.3. Is that right? 8.3 million pixels. Whereas 1080p, 1080 resolution gives you per monitor, so it's 1080 times, is it 1920 or is it no longer 1920? I think it's 1920. Gives you 2 million pixels. So if you think about it, each 4K monitor is the equivalent of 4, check it out, exactly, each 4K monitor gives you as much room as 4 1080p monitor, the regular monitors, which is why I went to 4K monitors. I went to 4K monitors in 2014 when each 4K monitor cost me $1,000 at the time, and I had to and I found a good deal or whatever, $250 off at the time. These days 4K monitors, you can get them for $200, $150 I've seen. And so I like that. I like the idea of having 4K monitors because, again, you can fit a lot more data, a lot more charts, because the resolution is higher. I have to warn you though, the first week that I went to 4K, I had a headache. The whole week, I had a headache. And I thought, wow, I'm not going to be able to stay on 4K. I was totally bummed out. And then after that, completely normal. Just 1 week, because the resolution is very sharp. Okay, but that's what I recommend. Somebody asked me about how many monitors should I get, this morning. Somebody said what size for 12 charts. Yeah, you don't need 4K. You just any monitor will do. A laptop would do, anything. For if you're looking at just wanting to put up 12 charts, I think he said. So does that make sense? So that would be not an issue at all if you're looking for a few charts. But if you're looking for to have 40 charts, something like this per monitor, then I recommend going with 4K. Now, I also did buy, when I first started experimenting with monitors, I did buy a 30-inch 4K. I was like, if it's the same data, whether it's 30-inch, 40-inch, why not use 30-inch? That would save room on my desktop, right? In my office, it wouldn't take as much space. Well, the problem with 30-inch 4K monitors is that everything is so small that you can't see anything. So I do recommend 40-inch, the smallest, I would say, to go with if you're gonna go with 4K resolution would be probably 38 inch. 38. That's so between, I would say, 38 to 42. They come in those sizes. I've seen 38, 39, whatever, 38 point something, 40 and 42. Those three are good. Anything large, what about 50? Wouldn't that be even better? You know, clear? No, it would take up too much space on your desk. So I recommend between 38 to 42, I would say. Okay, and then what kind of a machine is needed to power something up like that? Just a, you know, a video card, a modern day video card that has HDMI or DisplayPort or mini DisplayPort output. That's it. Just you know, don't buy an ancient video card, just something powerful enough with HDMI output. HDMI, DisplayPort, or mini DisplayPort, not VGA or DVI. Those wouldn't work for 4K resolution. Okay. You got two 32-inch and 40-inch. The size is not the thing; it's the resolution. Is what matters. RAM. Look, if you're building something new, then I would just get the latest and greatest. I'd get 32 gigabytes of RAM, and then get the fastest RAM you can get your hands on. Because when I put together a machine, it takes me, you know, I don't upgrade every. I mean, I upgrade every like 6 years, maybe, sometimes longer, 7 years, before I upgrade. There's no need to it. We're not trying to keep up with the latest video game. We're looking at 2D stuff, not 3D. You know, just charts and platforms. So, okay, all right. For trading, so many symbols to keep a close watch. You can have 4 monitors on a desktop easily with landscape and portrait. Yeah, right, easily. What was I gonna say? Now, for those of you that think, well, I only want to look at 6 charts. Why look at so many? Well, if after a while you will find that 6 charts, if I just watch 6 charts, I might not find a single setup on those 6 charts. So why not, you know, populate as many charts as possible and just look for that setup. Don't even bother with the name of the company or the symbol. Don't worry about that part. Just look for the setup. If the setup is not there, like some people say, oh, I get overwhelmed if there's too many charts. Why? If you're just looking for a certain setup, shouldn't be a problem getting overwhelmed, you know, because you're looking for an exact setup. If it's not there, it's not there. So that's why I don't mind looking at. I mean, I don't get confused or overwhelmed even if I looked at hundreds or thousands of charts per day. Okay. Let's see. So I'm gonna try and scroll up a little bit to see what questions I missed. Let's see. Where did I'm sorry. Why don't you retype your questions? I'm gonna start from the bottom. Let's see. What brand would you buy? Whatever brand you want. I don't know. I mean, they're all fine. I mean, for trading only, just buy the cheapest. For trading, just buy the cheapest. I mean, if it's for trading, but obviously, you know, anything, Dell, Samsung, whatever, that would work. Let's see. How do you size your positions? This is a good question. What I'm about to show you is actually in the document, in the folder, in the room drive. So it's called share sizing table. So feel free to download it, but I'll go over it real quick, okay? So it's called share sizing table. And so basically, this is what you're gonna get if you download it. And what it is I have a cheat sheet. So the way I share size is based on what I'm risking for each trade, as well as the size of the stop. So if you think about it, hold on one sec. If you think about it, we have, so here it is. If the entry was, let's just say, $100, okay, to keep the math simple. So let's zoom in. The stop was 99. And then the risk, however much you risk per trade, was, let's say you risked, per trade, you risk $1,000 per trade, which is a lot for day trading at least. So the share size would be, you would take $1,000. So the risk was, we said, risk per trade is $1,000, right? So if you wanted to share size correctly and risk only $1,000, you would take $1,000 divided by the difference between the entry price, which is, we said, $100, minus the stop price. So that gives you $1,000 divided by $1, or 1,000 shares. Does that make sense? So that's the formula. The formula is share size, and that's the correct formula, is risk size, risk amount per trade, divided by the stop size. Or stop size is the difference between entry price minus stop price. Okay? So that's the formula to calculate your share size. But who wants to be taking out a calculator and trying to figure out the correct share size for every trade? So what I do is I have a table like this that is printed and taped to my monitor. And so this tells me how much to buy or short with a 500, which is my risk, $500 per trade. So this is a stop size in cents, in pennies. 5 cents, 10,000 shares. 6 cents, 8,600 shares. If the difference between the entry price minus the stop price was only 6 cents, it was a little stock maybe, right? Then I buy or short 8,300 shares. If it's 7 cents, 7,100 shares. And then, when it becomes like, if the stop is between 29 cents to 36 cents, 1,300 shares. Does that make sense? So it's formula driven. Now, obviously, if I buy 1,300 shares and then the stop was only 29 cents, so 1,300 times 29 cents, that would only be risking $377, not 500. But this is, it's not supposed to, it's not meant to be exact. It's kind of ballpark. So does that make sense? So that's the cheat sheet that I have taped to my monitor. If you want to be exact, then there's a calculator here that you can use, and you just type in, your risk amount shouldn't change from trade to trade. So 500, this is what you populate, are the highlighted cells. So, and there's more to it than just this calculator. There's more to it than just calculating the share size. But if you type in the entry price, stop price, if you type in the target and how much you captured, and if you can also calculate how much, if the stock only gets 75% to target or 80% to target, how much would that be in terms of reward to risk, or how does that make sense? But here's the share size. It's calculated for you. But I don't use this. I'm not going to distract myself and look at an Excel sheet during the day. I just eyeball the table and I know exactly how much to get. Does that make sense? So I use this. And it's a great way to do it, because a lot of people, what they do is they just take, they just say, well, I'm going to take 1,000 shares of whatever stock I'm trading. If it's, and so they end up buying 1,000 shares of Apple, 1,000 shares of Bank of America, 1,000 shares of Sirius Satellite, and that leads to wild money management. And when you're buying 1,000 shares of Tesla, if your account allows you to, if you have a large account, that's not the same as buying 1,000 shares of a $20 stock. Does that make sense? So it's really all based on how much you want to risk per trade and the share size. Since the risk amount should be steady, should be the same from trade to trade, you can actually go ahead and print a table like this with the, and so just change this. Let's say your risk is $100. Just change this and it will populate for you. Now these are rounded to the nearest dollar. If you don't want it to be rounded, you just delete, just redo it. Like if you don't want it to be rounded, but this is rounded to up or down to the nearest 100 shares. Okay. If you want risk to be 250, there you go. And so over here, that's $1. 100 cents is $1. 125 cents, 150 cents, it's $1.50, right? Does that make sense? So that's the table that's available to you to download from the Room Drive. Okay. Yes, correct. I risk $500 per trade on day trades, and $1,000 or $2,000 per trade on swing trades. That is correct. Okay. All right. Let's see. Right, if you're like fiddling with a spreadsheet and you're not locked and loaded, you're gonna miss out. 100%. Yes, I agree. Absolutely. Edgar, Sami, can you please discuss your trade management on both day trades and swing trades? How do you balance when to sell strength or dealing with a pullback? Okay, that's a good question, but it's a long topic. But here's the thing. This is two different questions, by the way. So when do you sell strength, and when do you? I had this short today. I only had $500, 500 shares, which is $1,000 risk. Why? Because it was 39 by 40, by 41. So that's a $2 stop. So I took 500 shares short. So it made 1380 once I exited. Now, when do you get out of the play, cover it, or when do you just let it go, and if it bounces, you would expect it to come back down? That's the question, basically. If it's going climactic, then I cover it. So that's the key word. If it's going crazy, then I just cover it. If it's slow and steady, then I don't cover it. I had the YSG for like a month. I mean, I'm not joking. It might have lasted a month. I trailed out this day. So you see, from here to there, that's about a month, minus a day. Why? Because it never accelerated. But if it falls like a rock, then, who knows what kind of a bounce it will get. It might have a huge bounce, and you would give back everything. So if it drops like a rock, you gotta protect yourself and cover half, or cover the whole thing, or sell if you're in it long. But that's the second part to your question. Okay. YSG. So when you short a position, a lot of brokers will have you locate. I mean, if it's not available, you'd have to locate it and hold it overnight. You'd have to pay the locate fee plus the interest. The interest is, I don't know what it is, absolutely minimal, like pennies per day. If you locate it and it was hard to borrow, and you locate a stock and you hold it, you're going to pay every night that locate fee. The good thing is at TradeStation, which is where I maintain my swing account, if it's either free or not available to locate. E-Trade is not like this. With E-Trade, they do charge you to locate stocks, and so it's not ideal if you're going to short to have your swing account there. I don't think, at least. There are other issues too with E-Trade for swing trading. So with TradeStation, it's actually free to locate, or they don't even locate the shares. So the interest is, what the interest is? It's 4%, 4 to 6% annual. I'm holding it for a few days usually. So how much is that? That's like 1/10 of 1%, not even. So it costs nothing to, in terms of interest. But the second part, the first question was, how do you manage? Okay, there's a couple things to know about management. Okay, a couple things to keep in mind. When we're managing, the goal is. No. Let's take a look. Give me a pattern that you want. Like a buy setup pattern is easy to explain how to manage it. Basically, there's the entry. Okay, somewhere here. is where you want to look to enter. You want to look to exit at or near the prior high. So that would be, so that's the target. T for target, E for entry. Okay. Now, when you manage, always remember that to match your management to your goal for the play. When you just got in it, when you just get into a play, your goal here for the trade, I mean, you're not trying to take profit. You just got in it. You don't have any profit to take. So you want to have loose manage, what I call not loose, like, you know, not tight, the opposite of tight. Loose management. So, you know, you give it room, enough wiggle room until it gets going, but you don't, you know, you don't trail it real tight. And when it's close to the target, anywhere here near the prior high, if that's your target, then you go pretty tight. Okay. So loose means, you know, you put on a play, you put on your, take the play and put your stop under the pivot right here. Okay. Now, you know, you don't mess with it basically. Tight means you go maybe bar by bar, like the 1 minute or 2 minute bar by bar. You're trailing it real tight. You can even use level 2 if you want to go tighter, right? When the play is at the target and you think it's going to fall. Now, the biggest problem is, what do you do when it's in between? It's not at the entry, where you don't, you know, it's not at the entry, but it's not at the target. It's not very close to the target either. So in this area, how do you manage it? Okay, understand a couple things, that we are psychologically wired to do the opposite of what we're supposed to do when it comes to trading, which is, when it comes to trading, we're supposed to let profits run. But when a play is going in our favor, what happens is our fear of giving back money kicks in. Fear of giving back the profit kicks in. And so we start paying an inordinate amount of attention to the red bars, right? Which, any red bar, and then we're out. So you have to be mindful of that if you try to manage it, you're probably going to mess it up. And not over manage it, and just manage it, wait for pivots, or, so wait for a pivot usually is how I like to manage things. Or if you don't get a pivot, look for a topping sign. Like, what if the stock goes up multiple bars in a row, just green bars in a row, and then it starts to accelerate and gives you a really big green bar, then that's probably the top. Even if it's not at the target, I would tighten the trail. I'd go bar by bar, or I'd take it. So again, at or near the target, go very tight, bar by bar, usually. At or near the entry, stay loose, you know, stick with the stop and just don't do anything. In between, just understand that you're gonna, if you try to manage it, you're gonna screw it up. So don't manage it, don't do anything, don't raise the stop until you get a pivot, or you get a topping sign. Again, multiple bars up in a row, green bars up, and then wide range green bar. If you get that's short-term exhaustion. So that would make me want to get out of it. But otherwise, don't micromanage it. That's kind of the how to manage plays, whether you're day trading or swing trading, or it's different time frames. Now with swing trading, I do try, when I'm doing a momentum play, I do try to go bar by bar. If it's a momentum play, like this one, I'll just show you. No, I don't remember the symbol now. I don't remember the symbol, but if I start to get nice solid green bars, then nothing wrong with going bar by bar, because once the stock takes out the prior bars low, you know, it usually has a, you know, puts in a reversal. So, but most of the time I manage on hourly pivots, okay, or daily bar by bar. I try to keep it simple, so either daily bar by bar or hourly pivots until the stock either accelerates or gets to the target, one or the other. Okay, so hopefully that makes sense. I did do a presentation on management before, how to manage, so I have the slides for it, but I didn't want to take them out right now because it would take a while, and I wanted to get to other questions. But basically, I've done a whole lecture on how to manage in the room before, so those that are in the room with me have seen it. Okay, and I do it from time to time also, but that's kind of the, you know, that's the main thing to keep in mind. All right, okay, so let's see, and I apologize if I'm missing any questions. It's not my intention to skip any questions, it's just there's a lot of comments, so I'm trying to go through the comments and see. Question to meditate on: have you thought that hackers may enter traders' room so that they can get their possible user ID and broker to start playing around? Not sure, Nathan. Yeah, less information we give us. Yeah, well, I mean, you're protected with you have at least two different protections, which is the SPIC up to 500k, I think, and then the FDIC 250. So even if you get hacked, you're protected. But the other thing, if you get hacked, is you are they would have to get the funds transferred to their account, right? And in order to set up to add another account, they usually have to the broker sends you a confirmation email or a text message to say, hey, is this you? Whatever, so it's really almost impossible to hack into somebody else's broker's account and actually withdraw money out of it. Okay, so at any rate, so hopefully that makes sense. Do you look at pre-market data? I don't. Not that there's no value in it. Sometimes there is, but it's just I try to limit what I look at, so I don't go crazy. Okay, so I don't, analysis paralysis. If you you end up over analyzing things, then you're gonna have less time to actually execute the trade. So I try to just look at the real-time trading hours and not the pre and post market. Okay, personally, but I know of good traders that also use the pre and post market, and so there's nothing wrong with it. For the most part, I just don't do it. Okay, let's see. What other question? If it's a question, make sure to put a question mark at the end, so the font changes to blue and it stands out that way. All right, let's see. Could we get a recording of the video? Yeah, you'll have a recording of the video. I'm recording it. It will be uploaded to, I think I don't know what it is exactly, but it's like an open house list that that's where it will be uploaded to. And the coaching is uploaded also to the to your portal as a member, so so you'll have that. But I think this is also being uploaded to a playlist for just the open house. And if you have any questions or how to access it or things like that, oops, not me, don't email me. Email info@t3live.com. Don't email me, I wouldn't be able to help you. All right, there you go, somebody deleted it. Cool. Okay, let's see what else. What other questions did I miss? Questrade, could we, let's see, I've never used Questrade, I don't think I have. If TradeStation provides real-time data and level 2 information for free, correct, they do. Let's see, would BROS be a 1, 2, 3 on the month, on the daily? I'll take a look. It would be, yes. Now, not every 1, 2, 3, not every base breakout, not every pullback would be something I would want to do. So just keep that in mind. But that would be a 1, 2, 3 for sure. Let me look at it on multiple time frames. It looks okay too, but I don't know about the reward to risk, because the entry for this would be over here. Stop would be right here. And then the first resistance area is not far above. So that's about 1 to 1 probably in terms of reward to risk. Now, if you say, well, no, my target is up here. If you think it's going to get up there to like 60 something, then you should have enough reward to risk to play it. And again, it doesn't look horrible, it looks okay. It's just I would be concerned with that resistance. That would be my issue with it. But yeah, that is a 1, 2, 3. We like the ideal 1, 2, 3 would be, the ideal 1, 2, 3 would be, let me just delete all of that. Would be what? Would be when you have a base breakout. When you have a base and then you get a breakout. That's ideal. So if it's so this is not a base breakout. It's like a lot of sloppiness, and then it popped, and then it gave you a narrow range bar. It's 1, 2, 3, but not the ideal type. Okay. I noticed the BLDP or BLDR has a monthly 1, 2, 3, but the problem right now is it's just the time of the, and this is also not ideal because it's not coming from a base breakout, but I just noticed that this has a monthly 1, 2, 3, but the timing with the market is horrible right now. The market looks like we are gonna be having a long-term top. So buying something that's extended to the upside doesn't make sense. Okay. Otherwise, that's a monthly 1, 2, 3. Any good brokers you can suggest? It depends what it is you're looking for. It depends what it is you're looking for. Like speed and execution. There's nothing better than T3, the T3 broker, you know, with Sterling. But there's a commission fee, so it's like T3 Trading Group, I think. T3 Trading Group, yeah, that's the one. So check it out, t3trading.com, if you're interested. I have an account with them, but again, for something that's moving fast, that's the best broker that I'm aware of. But there's a, you know, it's not commission free. Okay, so it depends what it is you're looking for. Okay, let's see. I'm thinking moving from IB, wondering which one you'd suggest. Well, again, it depends what it is you're looking for. For swing trading, E-Trade wouldn't be a good option because a lot of times you cannot enter stop limit orders, and that's all I use. When I'm entering long or short, I use a stop limit always. And then with E-Trade, if you're entering short, it requires you to just enter a limit or a market order, not a stop limit. So that doesn't work for me. And I use TradeStation for my swing account. I also tried a bunch of other brokers, but I like TradeStation the most. I like IB actually for swing trading too, but it's to just enter an order in the system takes a while. So I don't have that much free time, and I wanted something that I could do much faster when entering orders in the system after the close or pre-market. So I went with TradeStation. I also have an algo with TradeStation, so I don't run it all the time, but so I like to use that platform because I also have an algo that's running in the background. Let's see. What volume do you use in your scanner? Anything over 1 million shares for day trading should be sufficient. Like 3, 4, 5 million would be even better, but anything over 1 mil should be good enough. For swing trading, anything over 500k is good enough for me. Now, sometimes if I like something a lot, like the relay or whatever it is, I mean, I just love that setup, that base breakdown on the hourly chart, and it did 140. I think the day before I entered, 143. So this day, 140, yeah, 141, and I still took it because I mean, this is too tight, too neat to not do. But most of the time, I stick with stuff that does over 500,000 shares per day. Okay. Let's see. Do you see potential for BABA to go back up? Yeah, I do, and I like it. But it never gave a good entry. Like I had a call on it this day in the newsletter, but it was just an idea because I saw the hourly chart was about to break out. It gapped down, got bought, based, but then the next day gapped up 5.5%. So even if I had an order for it, I would not have gotten filled because it gapped. But I actually had it as an idea in the newsletter that day, and it didn't really look that good on the daily. But I'm just keeping in mind the monthly chart, which dropped from 319 to 140 something, 138. Two major support also. Major support is the point from which a huge rally ensued, was produced. So that's why I thought maybe that would be it, but it gapped anyway. And so yeah, I like BABA. The biggest question mark right now is not what China's gonna do, the Chinese government's gonna do. I mean, that's an issue, but the biggest question mark is the market itself. So I have Tesla long term. I'm starting to trail it bar by bar on the weekly because it's extended, and if it takes out the prior, so 773 takes out the prior weekly bars low, gonna be out. I didn't think I would be doing that, but with the market looking really toppy, and I think this is going to be a long-term top. I said it 3 weeks ago in the SST sessions. I said I don't think we would take this out before the end of the year, when we broke down. I think it'll take who knows how long, but not before the end of the year. And now I think we might be in for like a real long-term top. We'll see. So that's kind of the issue with starting long-term investments, is the market is bigger than anything and everything. So even if you find something that you really like, it might get pulled down by the market basically. So I would rather focus on shorts personally. Okay, something that's really extended to the upside. Cars getting there, and that's going climactic. Okay, so that's a good watch. AER, I think. No, AEHR. Getting up there. I'm doing the IT short, something that's really extended on the larger time frames. So those, if you catch the top, and it ends up being the top, because a lot of times they look like they're gonna top and they just go sideways and then eventually go higher. But if this ends up being the top, they will fall hard. I mean, this has room to $200 easy. So I would rather focus on the shorts rather than the long plays with this in this market environment right now. Okay, all right. And the monthly doesn't look good. Yeah. It doesn't look horrible on the SPY monthly, but what looks bad is not even the monthly. It's what's happening on the daily, the way we're coming in. That's just highly bearish. When you have a pullback and it's just not pivots, like, you just get a pullback like this one, just a pullback, or this one, pullback, a drop. This was bearish. This was September. That's May. But what we have right now is pivots, very nice clean pivots. That's a sign of a real bearish pullback. Okay, and I could be wrong, but I don't think I am. And I think this time around the Fed is not gonna be able to do much about it, because if they keep pumping more money into the market with the inflation that we currently have, it's only gonna make things worse. And inflation is a huge issue. So I think they're not going to be able to do that, and they're going to start to taper. They're going to start to maybe raise interest rates while the market is dropping. So that's going to exacerbate the situation. And that's why I think we're going to be, we're in for a bearish long-term top. But I also thought September of last year was going to be the top for a long time. It lasted 3 months. This one lasted 3 months, and then exactly 3 months later we took it out. So I could be wrong. I don't want you to think that I'm always thinking, hey, if I'm wrong, then I'll adjust, no problem. My ego's not going to get hurt. So if I see that the market is starting to look bullish, then I'll change my mind and hope that the new one functions better. All right, let's see. Right, I said E-Trade for swing trading. So, for example, um, let's see. Like, I don't know if like some of the stocks, not all of them, but I don't know if this is one of them. You know, let's say you want to go short. You know, let's say stop limit, right? This might allow you. And then GTC so that it holds the next day. Let's say you want to short this at $1.39 and limit $1.37. Okay, this doesn't even allow you to short. So if you use stop limit, if you want a limit order, it's not going to allow you. So how do you short? Either market or limit, but not a stop limit. And for swing trading, it's all I use almost is stop limit. Actually, it does allow you now. But for the day, if you go to good till cancel, it doesn't allow you. Meaning, if I put the orders in tonight, they will not. I mean, I can't put them in for the next morning. So I'd have to wait until tomorrow morning to put them in. So that doesn't work for me. So that's why I don't like E-Trade for swing trading. Ultimately, since I day trade with E-Trade, I want to have a separate account anyway. This way I can separate swings from day trades. Okay, sometimes I end up day trading a position that I have swing also. If I mix the two up, then I'm gonna, like, let's say, you know, I'm in the stock short, but then it went climactic and I want to buy it just for the day. But I just got it short swing today. It went a little bit climactic on the intraday and I want to buy it. Well, if I end up buying it, then I'm going to cover it as a swing. But I don't want to cover it as a swing. Maybe my target is down here. So I do like to have a separate account, swing account, separate the swings from the day trades. And so that's kind of whether I have the both accounts at E-Trade or, you know, any other broker, I always want to have them separate anyway. And then this way you can also track the performance of your trading style separately, swings from day trades. What type of orders do I use for day trading? So if I'm putting the order in the system, always a stop limit. So if I say, well, I'm shorting this under 91 with a, so I always use a stop limit. If the stock is down 10% or more on the day, and I try to put in a stop limit, meaning it's a stock that's on an what do you call it? On an uptick or circuit breaker stock. If it says SSR, short sale restricted, and if I put in the order as a stop limit, I normally don't get filled. So what I do is I watch the stock, and when it's about to trigger, when it's about to break, like let's say 42, and I'm trying to short it under 42, I just send a limit order at 41 to short it on the bid. So a limit order most of the time. Or if it's a base breakout and I'm afraid I'm gonna get slippage, then I just jump in it before it pops, so that and I use a limit order as well. So again, either stop limit or limit order is what I use. And when I'm for my entries and for my exits, most of the time I hit the escape button on my keyboard, and that just flattens the position. So it's a market order. So most of the exits are market orders. Most of the entries are either stop limit or limit order. Okay. How do you manage separate P&Ls on various? How do you manage to separate your P&L of your various trading? Is it possible to be going over that performance of your trading each month or quarter of this year? It doesn't allow me to separate it by quarter or month, but you know, so I have the day trading in one account and the swing trading in another account. But I don't know like what it is you want. I mean, I can go over it, but it doesn't. This is one thing I don't like about E-Trade, is it doesn't. You know, this is year to date, but it doesn't. It gives me year to date, today, month to. That's it. So I look at it every weekend or so. You know, I look at my performance every weekend or so. But I don't really, that's not enough, honestly, to tell you the truth. if you're serious about your trading, it's a good idea to track and to know what strategies make you the most money, not by necessarily by month or quarter. It's just by strategy, by type of trade. But I've done that for years and years and years. It's not that I wouldn't benefit from continuing to do it, but there's a cost benefit to everything. So it would take me quite a bit of time to do that, and so I don't really do it. But I'm in tune with my trading and with, so much that I know when there's something wrong. I know what's working and what isn't. Okay, but for somebody who's new, I do recommend tracking your trades, either in Excel or some other program. There are some spreadsheets online, or not even spreadsheets, but like websites that interface with your account and can do the tracking for you. But it's even better to do manual tracking in a spreadsheet, and you just basically track by strategy. I don't know if I have a spreadsheet uploaded to the Room Drive. I can probably upload one, but you'd have to customize it a little bit to fit your own style. But basically, I'll show you something. Let's see if I can find it here. So I do recommend doing that kind of analysis. And then for swing trading, I do provide a tracking of all the swing trades. So the earnings plays tracked, right? That's the daily watch list, long-term trades, and the swing trades tracked. And then you get the performance metrics, average risk, number of trades, number of winners, losers, all that stuff. So they are tracked, each and every one of them, for swing trades. But what I was gonna show you was, I'll show you kind of, but I need to find it first. I'll show you an example of let's see if I can find it. Yeah, this should be, I've built multiple spreadsheets in the past. This should be good enough, so check it out. This is a spreadsheet that I created a long time ago, but basically the most important thing about tracking is that you track by strategy. So what are the different strategies that you do? I do gaps, climactics, and afternoon plays. Okay, gaps, climactics, afternoon plays, and then so they're separated in different tabs, right? Then when let me just hide all of that. Okay, and then all I'd have to do is type in the date, the day of the week, because then I can track my performance by day of the week, by time of the day. And so between, let's say, 9:30 to 10 o'clock, I would call that the open. Between 10 o'clock to, let's say, 12, that's the rest of the morning. Between 12 to 1, that would be the lunch doldrums. Between 1 to 2:30, that's early afternoon. Then 2:30 to, let's say, the close, that's late afternoon. So the time of the day, the stock symbol, the source of the play, because maybe you think you're making money taking room plays or whatever, right? It's a good idea to track the source of the play, direction, long or short, the strategy. And then for gaps, there's different types. There's pro, and there's novice, and there's in between. Pro is when I want to play in the direction of the gap. Novice is when I want to play against it. And then in between are the ones that could go either way, like the CTXS today. This one right here, CTXS, was slightly novice, slightly pro. And then I track the entry time frame, or I used to, right? The entry time frame, so I'll show you why in a minute. And you just type 1, 2, 5, that's it. And then the entry pattern, and there's different patterns like pullback, breakout, high low for gaps, failure pattern, shakeout, okay? And then the PNL, how much it made. Reversal time, there's 9 reversal times, or none if it wasn't done at a reversal time. If you want to find out if you're the type of trader that should retry plays, then track the number of trades that you took on the same stock. mistakes, right? And there's only a few mistakes that we can make. Entry related mistakes, exit related mistakes. Entry would be and if you know either early or exit or late. Same with the exit. Stop, right? You took the stop or didn't take it. Size, undersized, oversized. Play type mistakes. You know, was it a bad play? Or so I have a mistake and type, meaning if I put in entry and I type in one or two. One means early entry, two means late entry. And so just these things, it takes just 30 seconds probably to fill out per symbol. And after 100 trades or so, you can basically, you can find out what the average gain is. Number of trades, total, long or short, based on how many of them were pro gaps, novice gaps, in between type gaps, based on you're tracking the number of trades based on the day of the week. Maybe you're aggressive on Mondays, that's why you're losing, you're taking too many trades. By the time of the day, open, morning, lunch, after lunch, and afternoon, right? Time frame, type of entry. I'm sorry, I'm off the page here. So it's hard to, I'd have to reproject, and I can do that, but so hold on, let's see. So I'd have to reproject, I guess, to show you the rest of it, but it gives you, you know, just a simple sheet like this would give you a world of information. It gives you the total number of trades, again, by direction, long or short, by strategy, by day of the week, time of the day, time frame used, type of entry used, source of play, and it gives you number of trades, the total dollar made or lost, the average gain, average loss, batting average, Sharpe ratio, and then a whole bunch of other things here to the side. So I do recommend, you know, like creating a sheet that really suits your trading style, and that gives you all the information that you need. I am not really doing that right now because I don't have the time for it, and I'm in tune. I've done it for years already. After a while, you still get benefit from it, but not as much benefit as you would in the beginning. So I don't do it as much. Okay, I'll upload the sheet to the Room drive, so you can download it. But don't email me about how to like set it up or customize it, because obviously I wouldn't have the time to do that. But I'll upload it tonight, so you can download it tomorrow if you want. Okay, I'll upload that and you can take a look at it. Let's see, AJ, you're reposting your question. There's other questions too. Hold on just a second. So 500 for swing trades? No, 1,000 or 2,000 per swing trade. 500 is for day trades. Done. All right. Let's see, how's T3 compared with other platforms? Like I said, it's much faster, better execution, but more expensive because it's not commission free. So that's kind of the only issue with it. So if your thing if your main thing is to get the best execution, then the T3 platform is the way to go, in my opinion. Or if it's speed of execution or customer service, you know, then that's the way to go. If you're super active, which I am, then, you know, and you have to pay commission, then it adds up after a while. But if you're not as active, you don't tend to scalp a lot like I do, then it would work wonderfully for you. It should, at least. How do you determine stock is too extended for intraday trades? Well, this is also another long discussion, long topic. But basically, if you put a 20 MA on a stock, on a chart, if price is very close to the 20, then it's not extended on that time frame. It might be extended on a different time frame, but you can measure extension by just looking at the distance between current price, and the 20 MA. Okay, and if it's far from the 20 MA, then it's extended. Like this one, very extended. Does that make sense? Far from the 20, but as long as it's close to the 20, usually you don't want to go against it because it's not extended. But when it gets far away from the 20, then it's extended, especially if it accelerates. Accelerates means, it's going up, and here's the 20 down here, but then it starts to speed up and away from the 20, leaving behind the 20 MA, so to speak. So the distance now is much, even though it was already extended far above the 20, but now it's like way above. Does that make sense? So in this case, it would be climactic. So that's how I mostly measure the extension, is by having that 20 period moving average and looking at price and the distance between price and the moving average. Okay. All right, let's see. And then AJ, you had a question that you had to repost because I didn't see it. So let me scroll back up to get that question first, and then I'll come back and answer the rest of the questions. So what's your thought on doing day trades only in select stocks and not bother about scanning? I don't like that idea because I'm looking for gaps. I mean, how often do I do the same stocks gap? Like how often, if I were to go with Apple or let's say Apple, Microsoft, Tesla, whatever, a few other names, how often do those stocks gap? Once a quarter, when they report earnings or when there's major news comes out on them. But I'm looking for I'm looking for daily trade ideas. I'm looking for gaps, and so I have to. So my stock universe changes from day to day as a result, because I'm primarily interested in gapping stocks. So that's why I don't like that idea or that style. It wouldn't really suit me. If you're not a gap trader and you just want to focus on a few stocks, the same stocks every day, and look for a certain type of pattern, no problem. That works too. There's different ways. There's a million ways to skin a cat. Not that I've ever skinned a cat, but you know what I mean. Okay, so that's the first part. You may not catch big moves on the day, but as long as you make good money on okay. So those are my thoughts. I'm looking for gaps, for things that are gonna move a lot. If the stock is not gapping, it might not move that much, and I wouldn't be interested in it. So for me, that wouldn't work. All right. But you can experiment and see how it works out for you. Okay. Where can we study all the entry patterns? They're taught in a course called Trading the Pristine Method. So the patterns and the entries and the management and many other things, they're taught in a class. So it would be hard for me to review all that stuff in 10 minutes or 20 minutes. Okay. So I suggest you reach out to customer service, info@t3live.com, and see what they can hook you up with. How do you determine? Okay, talked about that. Let's see. Can you tell us how was your first trading year? Okay, first year trading. So you have to understand. I got lucky. I was still a student, and I was working part-time as an accountant somewhere, part-time, and I saved up. I was making good money because I was working overtime, and I made $20,000 and didn't know what to do with it at the time. I had a car, and I was renting a place, a studio, and in 6 months or so, I saved $20,000, and I didn't know what to do with it. And I read about Warren Buffett, of course, who hasn't, right? And I found out that the second richest man in the world at the time had made all his money from the stock market. And I thought, wow, if he can, And I also read about, this is the real motivation for me. I read about a 21-year-old kid from New York who made $1 million the year before. And I thought, wow, that's like my age. And if he can do it, then I'll blow him out of the water. That's what I thought, honestly. And so I out of the 20, I deposited 16 into an Ameritrade account, and I from 16 in 6 months I made $10,000. So it went up to 26. I think I added like $2,000 or $3,000 to the account because I started running out of buying power, and I was only swing trading. And then by the end of the year, I was up to 50. I wasn't up 50K. I was up about 34, I guess, or something like this. But from 16 to 50, and I think I deposited $2,000 or $3,000 more, so maybe whatever. But I more than doubled my account in under a year. So that it fascinated me because I thought, wow, that's easy, and I wasn't like risking much. And not only that, but when I have a brother who's the brainiac in the family, got PhD and 2 master's degrees, and he poured over my trades and said, oh wow, all your trades are like in slow moving stocks. What if you traded these more active stocks that I can send you on a daily basis? And he was basically referring to the stocks on the most active or the most up on the day, or biggest gainers, biggest losers. And sure enough, he started sending me those, and I started trading them actively, and I gave back everything that I made, the 30 plus, and $15,000 more before I stopped. And I said, that's no good. I realized that I was just buying in a bullish market, and I got lucky. That's why, like in 2020 and 2021, a lot of people thought trading is really easy and they can do it on their own, and they made a lot of money. But that's, as they say, don't confuse brains with a bullish market. It was just a really bullish market, and you just buy and hold anything almost, and you're almost guaranteed to make money. But when the market turns, if you still continue to trade, you'll give back everything and more, which is exactly what happened to me. So I realized I didn't know quite as much as I thought I did. I had just gotten lucky buying a bullish market, and I, like any other person would do, I started looking online for trading education. I visited this website, which actually my brother told me about at the time too, Zacks.com, which I don't know if you've ever seen this. It's a pretty good website, a lot of resources. At the time, they were running a contest, a trading challenge that was a year, that lasted the whole year, and the one that made the most money, and there were thousands of people participating, and the one with the most money at the end of the year basically won the challenge, got $100,000, and got a job from them. And so I participated in the challenge, but I did rather poorly. I was also working at the time, so I was just trading very part-time. But the winner, and people blogged about their trading journey. You had to blog about your trading journey also. And so people blogged about it, and the guy that was up $2 million on the year, from 100K, okay, to 2 million plus, he put out a blog post that his father passed away. So, and he was a really nice guy, and so I sent him a message. You could message each other also if you're in that contest. Sent him a message, and I said, sent him heartfelt condolences, basically. And I didn't think he would respond. I thought he was probably being bombarded by everybody else, so I didn't think he would respond to me, and he did. And we went back and forth with some messages, and he told me that he learned it all from a small company called Pristine. And he's like, he had been he had been trading for full time for 15 years, learned it all from a small company called Pristine. He said, go to pristine.com. And I did, of course. And then took the education there. Pristine eventually merged with T3, got bought by T3 Live, and I am Pristine now at T3, basically. So the methodology that I do and teach is the Pristine method. Okay, so at any rate, so that's my story, and the rest was history. In the first couple of years I struggled a little bit because I went from being a totally novice trader to a professional full-time trader, and I didn't have, I had to support myself and support my mom and younger brother who had just recently immigrated to the US. So I was a little bit stressed out about it. So it took me a while to get it. But once you kind of get the hang of it, at least if sometimes like during a bad environment, like I'll show you today. I mean, I lost $1,700. I'm not going to make money every single day. Okay, but the Qs is up 1600 today, just today. The Qs is up 16, 17 right now. So I'm actually down $100, $200. So some days I'm not going to make money every day, but after a while you get the hang of it, and you know, overall you're going to make money after a while. It's not a guarantee, of course. It's not. But I've never, you know, I have not looked back ever since. Okay. So that's kind of my story. After a while, I got noticed in one of the trading rooms that I was in at Pristine, and I was asked to join as a moderator. And I honestly thought I would do it for 6 months. That's it, because I thought, you know, healthy to do something like this, because I'm on my own. I'm constantly talking to myself. Maybe it would be cool to talk to other people and do it for 6 months. And then I realized once I started doing it that, wow, I'm actually better. I mean, I'm getting better myself by teaching. And then I thought back to my days when I was a student in college, and I used to support myself. The college had a tutoring program. And if you were good, and I was a 4.0 student, straight A student, if you're good and you had the grades, you could actually tutor other students and get paid for it. So I would have 18 different students, 17, 15 at any given time throughout my college years, and so I was a good teacher. And when I became a moderator, I realized, wait a second, that's my calling. I mean, trading is my vocation. That's how I make a living, but teaching is my calling. And I thought to myself more, and I said, I raised my brother since he was 13. That's who I am at heart. I'm more of a teacher than a trader, and I decided to stay on board, basically. And I became a full-time educator, but also a full-time trader. Now, somebody today asked, hey, the first question. I was a little bit offended, but it's I moved past it. Do you trade a real account? And I'm a real trader, but I understand why that person said that, because when was the last time you went to an open house and somebody showed you their P&L? Not just for the day, but for the year. When was the last time you saw that? Does it ever happen? I don't know. You tell me. You don't even have to tell me. But so there are a lot of people that, you know, that are really not trading, and they're just, what they're doing is their vocation is to, you know, sell. They're salespeople. You can tell. I couldn't sell you I'm not a sales guy at all. Okay. I know nothing about selling, truly. But the point is, teaching is my calling. I trust me, I did think about. I mean, look, whatever I do get by being a teacher, I don't need. Okay, that's for the year. I don't need. And last year, total was better. But the year's not over, so this year might even be better than last year. But the thing is, I benefit from it by being an educator and a teacher. My trading is better, and then I can keep my routine. If I didn't have to show up every day and do the same things every day, and I might slip a little bit. My performance might slip a little bit, right? So again, I understand why that person, I forgot their name, but asked that question. That's what I do. I'm a trader and a teacher at the same time. I'm both. Okay, and I think that's the best of both worlds, honestly. Let's see. Hey Fabio, I would rather not comment on other people, but okay, but there are some certain signs that any rational person would look for, and if certain things, and that should tell you without having to ask me or anybody else. Okay. Do you ever talk to a guy who told you about Pristine? No, I'm sorry to say I lost touch with him. I don't even remember his name, honestly. It's been, that was probably 16 years ago or so. It was a long time ago. When was it? That was probably, I mean, I started on a part-time basis either in 2004 or 2005. I don't even remember. 2004 or 2005. So, so that was before that. So I'm not sure, you know, it's been a long, long time, so I don't really remember. Lost touch. Okay. Some say that swing trading is easier than, and a beginner should start with swing trading before day trading. Would you agree? It depends, but I would say I would agree for the most part, because day trading is a lot more psychological, or a lot more, your psychology is tested more frequently, and things are moving fast, and you're trying to get in and out in the same day, in and out quickly. So your psychology is tested a lot more in day trading, and therefore, for somebody who's new to trading, yes, I would say it's easier. Swing trading as a style should be easier on, say, your psychology, because that's the biggest problem with with new traders, is that we don't have good psychology. We're not taught to. Our brains are wired to do the opposite of what works in the market. Okay. Um, I can give you, the simplest example. Hope. When a stock goes against you in trading, I mean, in real life, if you start hoping, if something was going against you, life was hard, was, whatever, you're going through something difficult, you start hoping. Otherwise, you fall into depression, right? So it's a survival mechanism, and it's healthy and it's good. But in trading, if something is going against you, you don't want to hope. If you start hoping, that means you're going to keep a losing play longer than you should, right? You will give it more room and more room, and it keeps going against you more and more and more. So we're really truly are not cut out to be traders. We're not wired like that. So that's kind of the biggest disadvantage that we have when compared to robots, is that we have emotions. So swing trading is not as emotionally intensive as day trading is. But sometimes, some years, I make a lot more day trading than I do swing trading. So then because it depends on the market, right? It depends on the market environment. Some years, though, I make more swing trading than I do day trading. That's for sure too. So I like to be both a swing trader and a day trader, and I just separate the two. The swing trading, most of the work is done after the close. I start scanning for swing trades after the close, and then whatever I find, I put the orders in the system after the close. Sometimes I can't, because I have to if it's a short and I have to locate it, then I'll enter the play. I'll enter the order for it the next morning before the market even opens. And then throughout the day, I have the swing account on a laptop that I just glance at. So it's easy for the most part, but day trading is more of a full-time job, unless you only day trade. Like, there's some people that day trade only the open, or day trade only the close, or and then they still have their other job. That works too. But for me, I like to, I'm here the whole day, so I'm trading the whole day basically. So that's my full-time job. Swing trading is like my part-time job. It probably takes up 2 hours a day of my time, and then after the close, I scan while I'm having lunch at my desk, or making phone calls, or things like that. I mean, I don't. It's easy for me to just go through a list while doing something else, and so swing trading is definitely a lot less labor intensive and a lot less time too. Okay. Right, swing trading is good for your health, but might not always be the most profitable style. Sometimes it's day trading. Let's see. Okay, good. Glad to hear about sharing my background with you. That it's helpful. Cool. Let's see. What else? What other questions did I skip over? And might have been Paul Lang. You knew. I did know Paul. Yeah, I did know Paul. Let's see. Thanks, Joe. let's see, is not the best for swings. I would say so. I would say so. 2021. 2020 was pretty good. And 2021 was also excellent, the first part of it. But then it's been kind of rough the last 3 months or so. Okay. Let's see. Did I miss any questions? Hey Sheldon, this is my second year in the room. It's just amazing that Sam is willing to share his knowledge. Thank you. I've learned so much. Wonderful. Appreciate it, Sheldon. Good to have you with us, of course. Can you explain rounding tops and their use? All right. Okay. All right. We'll wrap it up, but I'll just go over what rounding tops look like. Basically, a rounding top is what it sounds like, a top like that. Every rounding top has a breakout failure in it. So the stock is going up like so, and then starts to go sideways, and then it pops, and people don't see anything happening. They just say it's sideways. It's actually, you got a breakout failure. You see it? Now the bigger the pop and then the drop, the better it is. But that's how a rounding top forms. So a rounding top always contains within it a breakout failure. And again, people don't see it as a breakout failure, but it is. That's a rounding top. Connect the dots. So it's really bearish. It's how the market topped. It's truly how the market topped. I'll show you. And I showed you the 1,000 shares of the Qs at that time. Ended up getting shaken out. But on the hourly chart, you can see it. The SPY was even prettier. See it? The rounding top. The SPY was even more cleaner. And so that's the rounding top that we got. So rounding tops create a lot of supply, because by the time people notice that the stock is breaking down, they've already missed the top. And so there's a lot of resistance. And then people that bought the breakout are now having to exit. So what you want, if you're looking to play something long, you want V tops. So you want a simple 1 to 3 bar pullback. I mean V. So on the way up, you want it to look like this: 1 to 3 bars at the most. That's 3. That's the most. The more bars, and then the pullback, the more resistance. The more resistance, the more likely it is to fail. Okay. The bigger the bars, the more resistance. By the way, the CEI is moving a little bit in the post market. If you trade the post market, CEI is moving a little bit, but it flip-flops too. So the more bars, the bigger the volume that they form on when you're, the more supply there is. The more trap traders, the more likely the stock is to the sell-off to result in a deep pullback and for the buy setup to fail. So that's why I don't play the first buy setup coming after a rounding top. I always pass. And then if it works, then I look to do the next buy setup. So that's the thing about rounding tops. They have a lot of supply in them. Okay? All right. You missed the presentation. This is recorded, so you'll have access to it in a few minutes. I'll post it. What risk unit do you recommend for beginning traders? As small as possible. I mean, the thing is, if you can't make money with a $10 risk, you're not going to make money with a $100 risk. So in the beginning, I do recommend using a really small risk unit. This way you're just learning to trade. You're not looking to make money. You're just trying to learn how to trade. So I recommend using a very small risk unit, whatever you're comfortable with. Honestly, $5, $10, $20, that would still be better than paper trading. Okay, so that's what I recommend. What's the average time hold for swings? 3 to 5 days on average, but some last a month or more. But three to 5 on average. Let's see. All right, you're a rookie. I got tired of being so close to getting good winnings today. Went back to simulator and got one. Okay, sure, yeah. What do you recommend risking? When do you recommend raising their unit? There's two things to look for. First, how comfortable are you with raising the risk from, let's say, $20 to $50 per trade? How comfortable are you? And then, does your track record prove that you are making progress and that you are, that you should raise your risk? So give yourself some time, just a month. And are you making money on with the small risk? And would you feel comfortable raising your risk? If the answer is yes to both, then you can go ahead and raise your risk, and do it gradually. Initially it's hard to do it gradually, because if you're at 20, raising it by 25% would be just $5. So it's hard to do it on a gradual basis when your risk is very small. But if it's, it's $500, $300, then yeah, you can just raise it by $25, $50. But initially you might have to go from 20 to 30 or to 50. So you're doubling your risk initially, but that's okay because it's very small and you're just trying to get it up quickly because you are feeling comfortable and you are making money on a consistent basis. Okay. With your pullback, what kind of bars are you looking for? Normal bars, not too big. The thing to watch for is you don't want the pullback to start with a wide range red bar. So normal bars, and I prefer that the bars get bigger and bigger as the stock pulls back. So small bars, bigger and biggest, and then a narrow range bar, like so, would be ideal. I want the bars, each bar's high to be near the prior bar's low. I don't want them to be overlapping. I want them to all be red so that they're not, you don't have anybody trapped on the way down. And I don't want any tails as much as possible. If the volume is declining while the stock is pulling back, that's ideal. If you get a spike in volume at the end, that would be good. It comes from a V pivot rather than a rounding top. Obviously, we talked about that. That would be nice. If it's in the range of the 40 to 60% retracement from the top, if the stock went from here to there, that's 100%, and then pulls back about half, 60% would be the most I would want. I want it to be at support. You look to the left, it's at support at the rising 20. So those are all things that I look for in a pullback. And I don't honestly, I don't check one item at a time. I know what I'm looking for, and I just, I look at the picture and it's either there or not there. So does that make sense? So you don't have to memorize this stuff. After a while, you know exactly what you're supposed to be looking for. It's like picking somebody up from the airport. If you're trying to pick up a sibling or a close friend of yours, you're not gonna bring a picture with you of them, a picture, and keep looking at it and then looking at the crowd to see if you can you know what I mean? So after a while, you know exactly what they look like. You may not know how tall exactly they are or how much they weigh, but you have an idea of, you just know you know who they are, you know what they look like, so the same with trading. It becomes kind of second language. Okay. Do you always enter trades at the 20? Yeah, near the 20, unless I'm going counter trend, then away from the 20. Also in the mornings on gap trades, they're not going to be exactly at the 20 because they're gap trades. The stocks are gapping, so it's not going to be at the 20. But during the day, I try to enter at or near the 20 at least. Okay. Missed most of the portion. Yeah, it'll be available for later. All right, guys. I'm gonna step off the mic. We've been at it for an hour and a half, actually slightly more. And I hope you enjoyed today's discussion. Dave will have to do that some other time this week. We can do it during the day tomorrow or so. But I hope you enjoyed today's discussion. It was a difficult day in the market for sure. As I showed you, I lost money today. But that's the nature of the business we're in. So sometimes we can always win. As long as in the long run we win, that's what matters. Okay. So again, we'll be at it, back at it tomorrow. I'll speak to you at around 9:05 in the morning. Have a nice evening, and talk to you in the morning. Good night, everybody. Take care.